It started with a weird feeling, like I was playing a game but didn't quite know all the rules, or even who made them up. We're constantly bombarded with advice on financial literacy, budgeting, saving, how to use a credit card, invest for retirement. All seemingly helpful, practical stuff. And on the surface, it is. Knowing how a credit card works is better than not knowing. But then I started to look a bit deeper. I noticed who was often championing this kind of education. Banks, credit card companies, investment firms, the very institutions that sell you the financial products they're educating you about. And a thought began to form. Is this education truly about empowering me, or is it about making me a better, more efficient customer within their existing system? It's like being taught how to drive a specific brand of car, focusing on all its features and how to maintain it perfectly, but never being told how the engine is actually designed. Who built the roads you're forced to drive on, or who decides the price of gas. You become a very skilled driver of their car, on their roads, using their fuel. This led me down a rabbit hole. I started to question the very foundation of what we're told about money. For instance, most of us have this ingrained idea that money is a tangible, scarce resource. Like gold, we're taught to earn it, save it, protect it. But the reality of modern money is far stranger and more complex. The vast majority of money in circulation isn't paper bills or coins. It's digital entries and computer systems. It's credit. And who creates this credit? Primarily, commercial banks. Every time they issue a loan, when you take out a mortgage, the bank doesn't just pull pre-existing money from a vault. In a very real sense, they type new money into existence, credited to your account, with the promise that you'll pay it back with interest. This is all done under the regulatory umbrella and influence of central banks. Understanding this changes everything. If money can be created like this, almost out of thin air, then the concept of scarcity becomes very different. It's not naturally scarce. Its supply is managed and directed. This realization has profound implications for your life. Think about inflation, the gradual erosion of your money's purchasing power. If more money is being created through credit expansion, without a corresponding increase in real goods and services, the value of each dollar you hold can decrease. Your savings might be growing in nominal terms, but are they keeping pace with the real cost of living? Cost influenced by these massive, often invisible, monetary decisions. This isn't to say save nothing, but it is to say that saving your way to wealth, in a system that can devalue those savings through policy, is a much harder game than presented. Then there are the central banks themselves. Like the Federal Reserve in the US, we hear about them in the news, raising or lowering interest rates. It sounds technical, abstract, but these decisions are monumental. When they raise interest rates, it becomes more expensive for businesses to borrow and expand. Which can slow down the economy and impact job availability. Your mortgage payment might go up. The cost of financing a car increases. Conversely, when they lower rates and inject liquidity into the system, often by buying financial assets, it can stimulate borrowing and spending, but also inflate asset bubbles. Making housing or stocks unaffordable for many. These aren't just distant economic machinations. These are policies that directly dictate the cost of your life and the opportunities available. To you and your children, often before you've even had a chance to consider them. So, why isn't this the focus of popular financial education? Why are we taught the micro, how to manage our tiny slice of the pie, but not the macro? How the pie is made, who decides its size, and who gets the biggest pieces. This is where the uncomfortable truth started to crystallize for me. The education we generally receive is designed to make us functional cogs in the existing machine. It's about behavior modification, not genuine empowerment. They teach you how to operate within the established rules, how to be a responsible debtor, a diligent saver, an active consumer. They don't teach you how those rules are set, who benefits most from them, or how the entire game is structured. Consider the narrative of individual responsibility that's so heavily pushed. If you're in debt, it's your fault for overspending. If you can't afford a house, you didn't save hard enough. While personal choices matter, this narrative conveniently ignores the systemic pressures. Wages stagnating while asset prices, fueled by credit, soar. An education system that often leads to massive debt, before you even start your career. A consumer culture relentlessly marketed to you from birth. How can this apply to your life? Start by questioning the advice you receive and who it's coming from. If a financial advisor primarily makes money by selling you certain products, their advice will likely steer you towards those products. It doesn't mean the products are bad, but their incentives are aligned with selling, not necessarily with your deepest understanding. It means you need to become your own best advocate, armed with a broader perspective. When you understand that the value of your money is influenced by central bank policy, you might look differently at long-term savings. Perhaps you'd consider assets that historically hold value better during inflationary periods, or you'd be more critical of taking on large amounts of variable rate debt. When you understand that economic opportunities are shaped by these larger geopolitical and monetary currents, you might make different career choices, or even consider advocating for different kinds of policies. The subtle genius of the current approach to financial literacy is that it channels your energy into perfecting your role within the system, rather than questioning the system itself. It's like teaching a factory worker to be incredibly efficient at their specific station, but never explaining the overall factory design, the supply chain, the profit distribution, or who owns the factory. The worker becomes highly skilled at their task, contributing perfectly to the factory's output, but remains entirely dependent on the factory's structure. They don't want you to understand that your financial destiny is profoundly shaped by decisions made in rooms you'll never enter, by people you'll never meet, based on theories and objectives that are rarely explained in plain language. They want you to focus on your credit score, your monthly budget, your 401k contributions. All important, but all downstream from much larger forces. Think about it. You're given tools, credit cards, loans, investment accounts, and taught how to use them, but you're not taught how those tools were forged, or that their very existence serves a larger economic architecture. That might not always have your individual best interest as its primary goal. The aim isn't to help you achieve true financial sovereignty. It's to ensure you integrate smoothly into the prevailing economic model as a predictable consumer and reliable debtor. You're not being educated to be free. You're being programmed to be manageable. The real power isn't just in learning to manage your money. It's in understanding how money itself is managed, and by whom, and for what ultimate purpose. That's the literacy they don't widely advertise. So, we've peeled back a layer, seen how the game might be rigged. What now? How do we take this understanding and actually use it in our daily lives? It's not about becoming a financial wizard overnight. It starts with small shifts in perspective and how we consume information. When you hear about interest rate changes on the news, don't just think about your mortgage payment. Pause and ask, why is this happening now? Who does this decision really serve in the grander scheme of the economy? What are the less obvious ripple effects? Another simple thing. Diversify where you get your financial news and education. Don't just rely on the big, established institutions or mainstream media that often echo them. Seek out independent analysts, critical thinkers, even historical perspectives on money and economics. Understanding the past helps make sense of the present. When you encounter advice about a financial product, try asking a different question. Instead of just, is this good for me? Also ask, who benefits most if I use this? This isn't about becoming cynical, but about being aware of incentives. Understanding how money actually works, beyond just your bank account balance, is a form of power. It helps you filter information more effectively and ask more insightful questions before committing to significant financial decisions, like taking on large debts or making long-term investments. This approach is about adding a crucial layer of critical thinking to the conventional advice, a layer that constantly asks, is this truly empowering me, or is it guiding me to fit neatly into a predefined role? The benefit of this expanded awareness is significant. You become less reactive to market noise and more proactive in your financial life. You start to see underlying patterns. You're less likely to be swayed by short-term financial hype or fear-mongering tactics. Over time, this can lead to a more robust and genuine sense of financial security. It's about reclaiming some agency, understanding the broader economic currents so you're not just unknowingly swept along by them. This is a continuous journey of learning and questioning. This deeper literacy changes how you perceive your options. It can subtly inform your career choices, your approach to saving and investing, and even how you view your role in society. So, the journey doesn't end with this understanding. Keep questioning, keep learning. And for those interested in exploring a bit further, I've put something in the description below. It might prove helpful.